Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. And by the way, this is a quick video preview for the webinar, which is going to happen in a few moments, so hopefully you'll stick around. Look, we're going to talk markets. We are in the third week of this unnecessary war. We're also in the big week of a lot of major central bank interest rate announcements. Honestly, this is going to be wild, in my opinion, but let's dig in. Let's take a look at all of them. Let's see what's happening. Let's see what are the charts telling us. So hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, Monday is the 16th of March, 2026. We're mid-month. We still have a half of the month to go through. Honestly, this first half of March, it does look really crazy. It seems like I already want this month to finish, hoping that maybe the next one will be a little bit better. However, at this point, if we just take everything what we have right now, it doesn't really look very bright. Now, look, of course, let's try not to be as pessimistic, of course, as me, but certainly everything what's happening right now is not really helping to build that optimism. However, initially, I will say it this way, that initially I was kind of hoping to see a little bit of profit taking and, you know, a little bit of a throw a rocket here and there moment. However, then that's kind of it, and then you reach a deal. However, now, to be honest, it's getting a little bit out of hand, in my opinion. Maybe the initial plan was that to take a little bit of profit, but now I think that the way it's escalating further, it is really starting to slowly become a little bit more worrying. Again, let's see. Let's not rush into conclusions, of course. Still, certain things can be fixed, but I think that now at this point, there is a reputational or image damage moment. Could be, you know, there could be and nobody wants to lose face in a way. So neither of the sides. We'll see how that plays out, of course, but look, I'll talk about that a little bit more in the session right now. So before we go any further, as always, a risk disclaimer: the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm going to put my usual good morning in the chat room, everyone, ladies and gentlemen. So yes, as I need to remind everybody that this session is kind of made for discussion. Yes, on one hand, I'm I'm running the show and I'm talking. However, at the same time, I encourage everybody to throw out your comments, you know, your questions, your comments in general. What do you want to do? What do you want to say? Maybe just let me know. Something, of course, market related, and we'll go from there. So certainly, like I said, I do encourage everybody to, you know, kind of have a chat. We have the chat in there. So feel free. Also, by the way, speaking of having a chat, first of all, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. But what I wanted to show is basically that I will be holding a webinar. On the 26th of March. Yes, on the 26th of March. So, this is going to be webinar is going to be about how to position your trades in these turbulent markets. So basically, we're going to talk markets as usual, but basically, we're going to go into a little bit more detail and maybe in trades in terms of like positioning and how we can try to avoid all these inconsistencies that I don't know, sometimes I call them, because you have normal market movement and then you have this, you know, the March movement. So it's a little bit difficult sometimes to trade through those, invest in those. So like I said, I'm gonna pick up on that. So again, that's why I was saying, discussion and dialogue. Yes, this is all welcome during the session, because that's the whole point. To if you have questions, do prepare questions, throw them at me. And we'll go from there. If I know the answer, I'll tell you I know the answer. If I don't know the answer, I'll tell you that I don't know the answer, but I'll get back to you with an answer. So, ladies and gentlemen, yes. So check out our website, without further ado, let's jump into the economic calendar, because this calendar to this week is going to be full. Now, okay. First, probably let's deal with the conflict in the Middle East, right? Before we go into economic data, because economic data actually it needs some time to to digest this week. So basically, this week, this morning, I woke up to the news basically that not this morning, it was yesterday. I looked at the news and everything, and basically what I heard that the U.S. leader is actually asking other countries, especially NATO members, to participate in this whole madness, but participation is basically, sending your navy to ensure the security of the Strait of Hormuz passing, for oil tankers and everything, and all other ships to pass through the Strait of Hormuz. Honestly, that it is such a it's a check. If you're familiar with chess, then it's a check. Not checkmate, but check for other countries. So in a way, you're telling NATO members that if you're not going to participate in all this party, we might, let's say, cut funding or something like that to NATO, and then you're kind of on your own in a way, right? That's one thing. So in a way, but on the other hand, you're kind of dragging these countries, which are companies actually. Well, some countries are like companies, and you're dragging into these European nations into this conflict. So basically, for Iran, that would be like a no-brainer, and they will say, well, okay, if you guys, initially you said that you're not going to get involved in all this conflict, but now you are. So basically, you're our targets as well. That's another thing. So you're kind of really like in a dilemma right now, or should I say, the European Union is in a little bit of a dilemma right now. They just got rid of Greenland threats, right? Now they have this. I'm like, oh my God, honestly. I'm really curious what they're going to do. I'm really, really curious, because in general, I would say the standard answer, it should be that, you didn't talk to us, you didn't discuss with us prior attacking the country, prior attacking Iran. So why we should, now jump in, basically. But you didn't consult with us initially, right? Now you're trying to drag us into this, something that we didn't want to do. So again, it really depends on how this is going to go. And for also, what's interesting, another check from on the chessboard, another check from on the chessboard by the U.S. leader is that they said to China, like, hey, do you guys want to jump into this whole deal, right? By securing the passage of through the Strait of Hormuz. Now, I mean, we know that there is a meeting coming up in April, and the Chinese don't really kind of care, because their ships are coming through. They're fine, they're like in good relationships with Iran, so their ships are coming through. They're fine. However, this is the thing. I think that this is what the U.S. leader is trying to do, is basically trying to twist this in a way that to make China the bad guy, and say that you're like you're benefiting on all this war and everything like that. So again, benefiting from all this war. Well, you started it, So anyway, like I said, it's a mess. It's a political mess. It's right now my biggest problem in all this is that people around, just simple people, ordinary people are getting hurt because it's hurting lives, it's hurting businesses, it's hurting just in general in relationships, between countries. So in all because, two countries decided to kind of invade another country without discussing it with everybody else. Again, it's a really crazy world that we're living in. So let's see how the markets are going to deal with that. But the markets in general, and this is where I want to jump into the next kind of little topic. The markets have a lot to deal this week with because, look, first of all, central banks, right? We have tomorrow, in the morning, early hours in the Asian morning, we have RBA interest rate decision. That's one thing. Then we have when we're jumping into Wednesday, then is Bank of Canada interest rate decision. Not to mention the Fed, the Federal Reserve. Let me just refresh this page here very quickly. So the Federal Reserve as well is coming out, and also then we're going to go into Thursday, and Thursday we get BOJ interest rate decision in the morning, and then we get the BOE interest rate decision, and then we get the ECB interest rate decision. Honestly, the major, and then we're finishing off Friday with the PBoC interest rate decision, People's Bank of China. So we have a lot of interest rate decisions. Now, don't get me wrong, some are going to be more interesting than the others because on some we already know what's going to happen, but on some there's going to be, like I said, there's going to be probably more focus on. Now, in all these, the focus will be on the RBA because these guys are planning to go for a hike, and that's going to be the second hike in a row. And this is the thing, and I talked about this before, and I said to you that the RBA for now seems to be like the more logical one, kind of being the head, as one step ahead, because they know that they know that this is not going to end up well with inflation, and the only problem here, of course, is this is where different schools of thought are coming through, and there's a lot of debate among economists. Like, is it actually better to do it now, prior, or when you see higher inflation? So, because right now, let's say inflation in Australia. Let me just refresh my own memory on this one because there are so many different numbers to remember. 3.8. 3.8 right now is the look, the bank has a target of between 2 and 3%, right? Inflation. We're on the higher side, of course. We're above that, and these current events are not really going to help out, inflation going forward. And 3.8 right now. So the current forecast for on the 25th of March, what I'm seeing here, is the 3.8 actually the same story. So still a high number, getting closer to 4. So this is where, that's what I'm saying. The bank seems to be kind of trying to be one step ahead. Like they understand that when we're gonna get the next figure. By the way, maybe it's not the next figure that's going to come out in March that you need to worry about, because at the end of March we're going to get the February number. It's the April number that's going to matter, because honestly, if we take into consideration the oil prices that happened in March, this is going to blow up. Like the March inflation number, I'm really expecting this one to be on the higher side. If it's not going to be on the higher side, that's like, I'm going to stop believing the data that's coming out, because honestly, going from like $60 to like $100, hey, come on, like honestly, come on. So that's what I'm saying. So the March inflation number is going to be a bummer to everybody, in my opinion. Headline, maybe not the core headline, should be like, poof, because that includes energy and food. So long story short, the RBA is like trying to be ahead of the game a little bit. Let's see if their tactic is going to be the more acceptable, the more like logical one, because at the moment, like I said, some other banks are kind of really like holding off from doing that. But the RBA is going to go and hike right now, and then they're going to wait. They're going to see what's going to happen, and then they're going to wait. So long story short, for now, this is the bank that I'm really going to be watching very carefully tomorrow. Yes, The BOC and the Federal Reserve, well, look, interest rate decision from the BOC. Now, the current expectation is that the rate is going to remain the same at 2.25. I really wouldn't surprise if suddenly the BOC says, you know what, we like the RBA model. Let's also go for 25 basis point cut. Like I said, for now, I doubt that it's going to happen, but I wouldn't be surprised. Let's put it this way. The Federal Reserve, of course, the Fed. Ladies and gentlemen, nobody, I think, in the Fed right now gives a damn in terms of up until May. Basically, Jerome Powell really is chilling, in my opinion. He's like, well, I hope he's chilling, because he's leaving in May. But something tells me that he's getting a lot of pressure right now, just because I think the U.S. administration understands that there's going to be more inflation, or like the inflation will be on the higher side later on, so they want to drop the rates now so that while they can still justify somehow the dropping of the rate, and then start hiking. So basically clearing the path for Christopher Walsh, for the new government, the new governor, the new Fed chair, and because we know that he's more of a hawk, and he's the one who hikes. So it wouldn't be, like I said, a bad thing for him to start hiking, because he's more of a pro hiking guy. From what we understand, maybe we're wrong. I don't know. Maybe he changed his views, but that's what I'm saying. So it's kind of better to start hiking from lower grounds, right? So it's like creating a nice plateau for him where he can still go hike and justify everything. So that's why there's a lot of pressure right now on Powell in order to to drop the rates as low as possible. Anyway, I don't think that is going to happen. I think that Powell is just going to chill right now. Again, using the word chill. He's not chilling. He's actually probably in a lot of stress right now. But he's leaving in his last meeting is in April. So to Wednesday, we'll see what's going to happen. Look, nothing will happen. I think most likely we're gonna get another dull meeting like last time. But I think that this is the dullness is the exciting part, actually, because to see that you're not maybe reacting much to everything what you're getting thrown at. It's that's where the interesting part comes in. Anyway, but in terms of cutting, ladies and gentlemen, by the end of this year, I think we're expecting right now just one cut. On Friday, I was looking at this. We were not expecting a cut at all. Now we're expecting a cut. I think that this will change. I think that eventually, as you can see even here, the hike disappeared. On Friday I talked about this, and it was here. We had a 0 probability for a hike, but it was still here. It was still showing. Now it's not even showing here. Look, I think that this will return closer to the end of the year. I think we'll see this one coming back, like the probability for a hike. It might sit at 0, but still the probability it will be showing here, because on Friday it was showing. So, in terms of other central banks, Thursday, we're going to jump into Thursday, and on Thursday, BOJ, interest rate decision. These guys are, initially were planning to hike, but now it seems like they don't need to. The world is conveniently falling apart. This is where naturally you could start buying the yen in a way, so maybe it will work out. So, but this is the thing. I think that the BOJ is worried that if the world starts falling apart and then still nobody jumps into the Japanese yen, now that's where Sanae Takaichi will have to just shut her mouth and basically listen to the BOJ, because I know that Sanae Takaichi came out with big promises. She's doing this, these things, these good things, those good things for the society, or at least trying to do that. But for all that, you need spending, right? You need cheaper credit, and if it's not going to flow nicely if you suddenly see a hike in interest rates. So that's why she didn't really want that. But now, if let's say, like I said, if the economy goes down and the Japanese yen does not rise or like strengthen, then basically the problem is, like I said, that she will have to admit that the BOJ has to go and hike rates. There we go. You need to sometimes it's like a little bit, worrying, confusing. Sometimes some are hiking, some are cutting. So anyway, so yeah, going down the line later on Thursday, BOE is going to come out with its interest rate decision. Now, before that, we'll get actually the job numbers from UK now, which is going to be very, very interesting. Oh, I totally forgot. In between the UK job numbers and the interest rate decision by the BOE, we're going to get the S&P interest rate decision. There we go, ladies and gentlemen. Sorry about that. Honestly, sorry, Switzerland. Totally forgot you guys here. But okay, of course, the 0% is not going to go anywhere. I think they're going to stay with that. But the UK, look. The interesting part here is that, yes, they're not going to go for a hike. They're going to keep the rate unchanged. I think, in my opinion, they're going to continue monitoring the situation, because their rate is kind of already like on the slightly maybe higher side. But but what's going to be interesting, of course, as always, it's the these are going to be the hikes, the votes. How many people are going to be for unchanged? At the moment, the forecast is for 6 people being unchanged. So, but this is the thing. I think that maybe the number here, and this is only purely my guess, honestly, you can throw the tomato at me if I'm wrong, but I'm just guessing here that maybe the unchanged will remain the same at 6, but the 3 here might draw, there could diminish from 2, and then that one vote could actually go into hike. Or maybe from here, or maybe if somebody from unchanged will say, I want to jump into the hike idea. So long story short, either from here or from here, if there is a drop out of there by one member who's going to go into the hike front here and the hike team, then this is where the interesting bit is going to come in the British pound, and I think we could see a little bit of strength in there. So let's keep an eye on that. For now, let's see, of course, how these interest rates are going to come out. And of course, and after that, after like a couple of hours, we're going to get the ECB. The ECB is willing to keep the rate unchanged for now, but we know that there were talks that, they're maybe going to consider even going for a hike at some point this year. Again, something tells me that maybe not, but again, it's difficult right now. Like I said, if suddenly everything deteriorates very quickly, I think that this is where like I said, I don't know if they're going to keep the rate unchanged, or if deterioration, let's say the stock market goes down, that's fine. I think that it's not going to be the reason for the rate cut, for example, right, or something else. But if the inflation starts picking up very rapidly, I think that this is what would force the ECB to go for a hike, and another 25 basis point hike, bringing it to 2.4. Hey, not critical, but it would be the first indication. But we, of course, we'll watch the press conference. That's what we're going to be doing, the ECB press conference. So we'll see what's happening there. Anyway, so yeah, that's in terms of the central bank decisions. And like I said, to finish it off, the sprinkle on top will be the Bank of China, the People's Bank of China, and those guys there are not planning to do anything. So they're going to keep the rate unchanged. I think that they don't want to cause like much maybe volatility or something. But again, like I said, it's a difficult one, but certainly for now, I think they might keep the rate unchanged just to see what the other central banks are going to do and what market reactions they're going to get. So apart from that, there are some other pieces of information coming out, but I think that you can check out the economic calendar for that, or you can, like I said, drop me a message just to make me, if you want to ask my opinion on this. But yeah, like I said, there are some other economic data sets coming out, but I think that the central banks are going to be the key ones. So speaking of key, I think we need to keep an eye on the charts as well, on the technical side of the charts, because honestly, it's telling us, it could be telling us actually a lot. So look, first of all, Nikkei 225, this is what we're going to jump into. And after some kind of jumpiness here, we were back above this upside line, now we're back below it. I think what I really need to do here is remove all the drawings and start fresh. So overall, what we're seeing here is, of course, a decline. So we can then draw from the all-time high here, we can draw a downside line, and yep, this will show us that we're trading below this downside line still. That's one thing. Now, another negative thing here is the fact that we're trading below the 50-day EMA here on my daily chart, shown as the green line. Negative, negative. That's it. That's it. We're now below it, but maybe we'll push back above it. It's basically, we're kind of oscillating around this 50-day EMA. So that means that I don't want to rush into conclusions, okay? Because there is some positivity right now this morning in some of them, in some futures. So yeah, I don't want to, like I said, I don't want to say that suddenly I'm becoming like bearish or something. No, maybe we could start just oscillating around that 50-day EMA. Don't be surprised, So that means that we could break this downside line. And if we do break the downside line, yes, that creates more opportunities for the bulls in a way to step in. That said, for me, I think that if I want to look at some higher levels, maybe I think I would need to wait for a push somewhere above this territory right here. This is the area between the 55,700 and 56,135. I know it's a wide one, but to be honest, I rather, kind of keep this on the chart for now. So long story short, this is what I'm going to keep an eye on. And if we do clear this whole highlighted zone, I'm going to go to the upside. So yeah, I'm going to just leave a little bit of room for maneuverability. The downside scenario, well, this is where I do like this area, and I do like this whole area around here, around these levels. 55,523, 52,656. So yes, this is a key area of support. If that gets cleared and we fall below the 100-day EMA right here, then yes, great. More sellers here could join in. There we go, something like that. And yeah, if we do kind of, like I said, clear the zone, we clear the 100-day EMA, yes, of course, this is, like I said, this is pointing more towards the downside. So this is my game plan right now on Nikkei. Kospi, very quickly, South Korean, just to check what's happening. There's a little bit of positivity. Okay, yes, pushing back up, that's fine. But look, no clarity for now. I think also the same story. Keep your eyes on in this case, keep your eyes on the 20-day SMA, because we could be oscillating around this one. Let's jump into Shanghai Composite. Now this one's interesting. We dropped again. Look at this piercing through moment through the lower side of this range here. This 4,080 territory, this 50-day EMA, which all of these levels are providing support. Sorry, not levels. All of these indicators are kind of providing good support. We pierced through that. We failed to stay below that. This to me looks more like a positive moment. Maybe we could see, a reversal back up. That said, I would prefer to wait for a push back above the 20-day SMA here. Not specifically maybe this level, the 4,127, which I have here, is just kind of, it's good, but it's very, really very subjective. I mean, everything is subjective, but this one is really subjective. So I just have it here for probably just illustrative purposes. But we can actually get rid of it. But yeah, if we would do climb back above the 20-day SMA and within my Bollinger Band here, which is roughly around the 4,122 right now, then yeah, I'm going to get a little bit more excited with the upside. At this point, I'm just curious if we are actually going to see that rebound. Let's jump into the Dow Jones Industrial Average. Ladies and gentlemen, look at Friday. Look at Friday, ladies and gentlemen. We declined a lot. In general, since hitting the all-time high, we have declined not a full 8%. We declined not a full 8%, and I think that right now, at the moment, the markets are really trying to figure out what to do next. Look, is it a profit-taking moment? Should we start buying again? Maybe. I don't want to say this yet because we still have issues. We still have problems. Of course, the cash index right now is. Let me just double check. Wait, where's that? Where is my Dow Jones Industrial Average? There we go. So we are currently trading at around 46,727 on the cash index. So basically we're above, yes, and we're above the 200-day EMA. That's the interesting bit. We're above the 200-day EMA on our daily chart here. If we somehow stay above it, I'm maybe leaning a little bit more towards the upside. But in general, look at this. This arrow, I talked about it. I said that if we do fall below the 47,850 zone, I'll lean towards the downside. There we go. This worked out nicely. Now the question is, can we see something like this? Can we see like a rebound here? And if we do, at the moment we are seeing this rebound, but if we can stay above the 200-day EMA, then yes, I'm going to lean a little bit more towards this downside line, which is a very, very tentative line. Honestly, like it's not ideal here, not picture perfect. Maybe even better, it would be better just to kind of target the 100-day EMA right here and then kind of go from there. But at this point, yes, there are some signs of life. But let's see if we can get like more life out of this. Can we get a bigger move to the upside, a larger correction to the upside? S&P 500, similar story. We had a great run. We tested this area right here. Came very close to testing the 200-day EMA right here, 6,592, something like that. And yeah, we came very close to doing that, but failed. Okay, look, in general, this worked out. I talked about this breakout here to the downside. It worked out nicely. Just didn't reach the 200-day EMA. Right now, the cash index is trading around 6,669. So we're somewhere around here, basically. Yep. Look, what I really want to do here is, again, remove all the drawings and start fresh. So, yep, something fell there. For now, we're looking at this downside line taken from the high of the 26th of February. So this little short-term downside resistance line taken from there could be an interesting line just to have it on your chart. I'm not saying that this is, this is what you need to focus on, but certainly if we do retrace back up somehow, this downside line could be in the way, and why not to target that one? But certainly, if we are looking for some higher levels, I think that you just need to wait for a push above the 100-day EMA, wherever it's going to be. If we climb back above it, then there is a little bit of a greater chance for this one to move a little bit more to the upside. Nasdaq, there we go. We blew the lower side here of this range through, and 24,455. We moved below it. Came again very close on the cash index to test the 200-day EMA, but we still didn't test it. And but now my problem is that we are back inside this little range. So we got the drop here, we got the move lower, but now we're just kind of pushing back inside. Okay, look, I'm not saying anything. The day is younger, so are we. Look, maybe the cash could reverse if Europe suddenly goes down at later on, then it could drag the indices here, the US futures also to the downside. So maybe we could end up being back below the 24,455. Right now we're, like I said, on the at 24,515-ish zone. So we're not far. So maybe we still could end up being below this. Look, I should stick to my game plan, because what I said to you previously, that if we do drop and stay below the 24,455, I'm leaning towards the downside. And I think that this is what I need to stick to right now. We'll see what's going to happen with the market today, with the European market. But again, look, we have a bunch of interest rate decision as well coming out. We have the whole conflict still. This is why I'm holding this webinar you know, on the 26th of March, because again, we're, you know, sometimes it's difficult to understand what to do, what to kind of to do next. So let's see what's going to happen. Let's see. For now, I'll take it. I'll put it this way: as long as we stay below the 24,455, I'm going to leaning a little bit more towards the downside. If we start oscillating around this area, I'm not really. I'm probably going to avoid this for now and just kind of monitor something else. Now, so ladies and gentlemen, okay. Basically, if we push back above the 24,809 zone right here, then yes, great, more buyers here could join in. The German index DAX. Look, the German index DAX, we are open. We're a little bit open to the downside here, as you can see. But it seems like maybe the bulls are not giving up. That said, we are below my hurdle here. I talked about this 23,600. I said to you that if we do drop and stay below it, I'm going to lean towards the downside. So for now, that's why I'm not. That's why I was saying about the U.S. indices that we're seeing right now some recovery, but I'm being a little bit more on the cautious side because the world is not in that place, and the central banks right now, like I said, they're all, you know, considering potentially reducing the amount of cuts or maybe even hiking. So not very good for the stock market. Let's see. Let's see what's going to happen there. The FTSE 100. The FTSE 100. Ooh, very interesting. The bullish 3 method. Okay, pole and 3 consecutive candles to the downside. All bodies are within the sum of their bodies is within the body of the first one. And okay, interesting. Looks quite positive actually. That said, it's not a guaranteed pattern. It's not like you know, a pattern that everybody should kind of really take it, you know, as it says in the textbook. Look, problems do happen, headlines happen a lot. So at the moment, purely from the technical side, it does look bullish. However, if you're not comfortable with this idea, very simple. You can wait for a push somewhere above the 10,400 again, if in 12 zone right here, and then you could, yeah, we could maybe get a little bit more excited with the upside. But then you would say, oh wait, I mean, probably I'm going to be missing out on this whole move here, potential move. True, but if this reverses, you know, quickly through this 10,250, then yeah, I mean, this you're gonna be losing. You're not gonna be missing out. You're gonna be losing. So unless you're willing to take a little bit of a hit or something like that, so just for now, let's not rush, but certainly let's examine this option of a possible move back up, and it could be quite interesting. But if it's, like I said, if we do fall below the 10,250 zone right here, I think then, yeah, I will lean towards my 100 day EMA shown as the blue line right there. CAC 40, yes, drifting lower, drifting nicely to the downside here. Again, weakness in the French index. I think more weakness could come. We do have some interesting levels. For example, this one right here, the 7,875, could be a nice target, but certainly let's not rush into conclusions. I mean, there are some lower levels right here. There are plenty of levels which could be tested. So, you know, pick and choose, basically, pick and choose. I would say this way: if you're looking for some higher levels, then wait for a push above the 200-day EMA, and then we'll take from there. DXY, ladies and gentlemen, there we go. We hit the level that I was talking about, the 100.5. We hit that. It provided fantastic resistance. Mission accomplished. I talked about this a lot for a few sessions now, that I was bullish on the US dollar because this whole war is bullish for the US dollar. Yes, safe haven, one thing, yes, of course. But again, safe haven, it's not really safe haven right now, like, I mean, honestly, because the US does not need a stronger dollar. At this point, it's more of a, you know, dollar dominance, and you know, you don't like Iran because they were not, yeah, of course, you know, regime is one thing, but then again, you know, who are you to go around and like, dictating the rules, who should have what regime? And another thing is that we understand that, that's Iran was a big supporter of de-dollarization, not to trade in dollars, US dollars, and the same story with Venezuela. And, look what happened. So basically, for right now, we're watching this 100.5 zone. It's from the technical side, it's a key area of resistance. If you're looking for some higher levels, then yes, wait for a clearance of this 100.5 zone. If we can get that move, amazing. More buyers here could join in. If we look, if we take, where is it? Wait. Yeah, something like that. Right now, I would say this way: if you're looking for some lower levels, then probably a drop below this upside line within the range here. This upside line drawn from the low of the 27th of January, the lowest point of this year, the current lowest point of this year. So if we do drop below this upside line, then yes, I'm going to lean a little bit more towards the downside. Very simple. Very quick glance at VIX. Yep, it's elevated still, but not as elevated as it was before. So, okay. Anyway, let's have a look at the Forex market, ladies and gentlemen, because I still need to jump into commodities. Okay, we're getting a nice little hold up near this upside line, near the 50-day EMA. So pretty straightforward on the AUDUSD. A drop below the 50-day EMA could lead, of course, automatically would be a break of this upside line, and it could lead to a test of the 0.69 territory, somewhere around here. Again, the RBA is in focus. This is something that for all you AUD traders, you need to keep an eye on that one. Honestly, I think that although the news is positive that the interest rate decision will be, a hike, it could be, of course, it should be theoretically positive for the currency, for AUD. That said, if the US dollar continues gaining, then I think it will get overshadowed. It will overshadow the AUD. The RBA news. AUDNZD, this one is looking good. Look at this. Look at my target here, 1.21, 24, 25 zone-ish. Monthly chart. There we go, very quickly. This is the midpoint. This is the midpoint. There we go. This is what I was talking about. Look, I draw this Fibonacci retracement, right? From the highest point of 2011 to the lowest point of 2020. Brilliant. Last month we had a nice clear area of resistance right here near the 50%. Amazing. I said that if we do clear that, I'm going to go higher, but if we stall here, maybe a little bit of a downside move here could happen. Then I said if we clear this one, yes, the 61.8 looks attractive, but we know that the Fibonacci levels, I mean the market does love the midpoints between the Fibonacci. So there we go. Look at this amazing bang on hit. Wow, this is just spectacular. Look, right now, what I'm expecting is that if we do clear this 1.21, 24, 25 zone, actually, I will go higher. Very simple. But there is could be a little bit of profit taking scene. So just wait for the RBA to come out, because again, this could skew the whole chart here as well. AUDJPY, very quickly. Yes, yen buying. There we go. A little bit some logic in here, and at the end of last week. Again, a similar story. Keep your eyes on politics here, and keep your eyes on the RBA. Look, I'll put it this way, very simple. If we do clear the current highest point of this year, near the 114 zone-ish roughly, then yes, I'm going to go to the upside. For now, I'm leaning towards the downside, but only up until here, up until the 110.79 zone near the 20-day SMA. And then we'll take it from there. Euro USD, of course, very important to see what we will get during the press conference, on Thursday. So maybe we could remain in the negative territory for a while, but then, something will come out saying that, oh, we actually are considering, rate hikes. So this is what could bring the euro maybe back up. But again, the same story as with the AUDUSD. If the US dollar remains the hotter topic, it will influence what's going to happen with the Euro USD. So for now, look, if ECB comes out, says that we're actually considering some rate hikes, then yeah, we could see some positivity kicking into Euro USD. But maybe it could be a temporary, just little temporary fix. And that's kind of it. GBPUSD, of course, similar story. But this one I like because this one's in a falling channel here. This one's in a falling channel, and okay. In general, while we remain inside the pattern, and this is already, I said this several times, that while we remain inside the pattern, we could still drift lower. The pattern is to the downside. Yep, we could still drift lower, but we're very close to the lower side of the falling channel. If we do rebound, great, I'll go higher. And you remember the thing that I said to you in the beginning of this session, that what I'm going to be very interested in will be this little number here, where it's currently sitting at 0. If we get 1% here, ooh, now this is where I think that GBPUSD could actually reverse nicely to the upside. Let's jump into USDCAD. Okay, there we go. Look at this. Quick update on what's happening with USDCAD. We have broken the upper side of the triangle pattern, but what's interesting, we found resistance near this downside line, taken from the high of the 21st of November. So we're finding good resistance, and the question is right now, can we actually go further north? Well, at the moment, I think I have to just kind of remain cautiously bullish. We broke the upper side of the triangle here within, so this kind of gives us a little bit of positivity, but let's see what's going to happen next. Let's see if we're gonna get like that break through the downside line. If not, if we start pushing back below or back inside the triangle, maybe the problem is that the rising oil prices are outpulling the US dollar strength. So yeah, that's the idea here on USD CAD. USDJPY, a little bit of positivity in the yen against the US dollar, but still, yeah, it's. I talked about this. I said that if we do push and stay above the 159.45, I'm going to lean further north. USDCHF, of course, we're watching this one as well. We're near the upper side of the rising channel here. So let's see if we can actually break through this downside line, and if we can, then yeah, I'm going to go higher. This is very simple to me here, but at the moment I think we need to be very careful. It is like I said, we need to understand what's going to happen with the US dollar. If it's going to, if the 100.5 area for DXY is the strong area of resistance. Ladies and gentlemen, let's jump into the commodity world, and there we go, ladies and gentlemen. I talked about this bearishness of mine on gold, and there we go. What comes up must come down eventually. So we're seeing a little more profit taking here. We broke through the lower side of this triangle. There we go. We broke the upside line, this short-term upside line taken from the low of the 31st of December. And now we're resting near this 4,996 area. Basically, we're just resting a little bit below that. So my next target is the 50-day EMA here, shown as the green line. And that's going to be my target. My next aim is the 4,841, as if we stay below the 4,996. So good result here. Congratulations for those who are shorting this. So yes, this is working out nicely. Silver also breaking through the 38.2 on the Fibonacci retracement, breaking through the lower side of the rising wedge, the unfinished rising wedge, I would call it actually. Yeah, everything's pointing a little bit lower. If we do fall and stay below this little hurdle here, this 78 territory, yeah, ladies and gentlemen, I think there further downside here could be possible. Let's have a look at platinum very quickly. Similar story. Good result here. Dropped below the 2088 zone. I talked about it. Now I'm going to be watching this little area, the 2017. But in general, if we do fall below the 2000 area, ooh, now that's where the interesting bit could come in. Palladium is drifting lower, and actually I'm loving this palladium, honestly. It's a great metal, but look at this month. There we go. That's the profit taking that I'm talking about. So eventually what comes up must come down. There we go. After a few false moves here, there we go. This is the move that's happening. So I'm targeting the 1,450 area right here, which is near the 23.6 on the Fibonacci retracement, which is drawn from the highest point of 2022 to the lowest point of 2024. And slightly below that hurdle is the 100 and the 50-day EMAs here, right here. So these are actually good areas that I'm going to be keeping a very, very close eye on. Let's jump into copper very quick. Yep, there we go. This is a monthly chart. This is a daily, and we're approaching key support. Let's see if we can clear this 1,156 zone. And if that happens, yep, further declines are possible. Sugar. Ooh, sugar is holding up. Okay, this one's interesting. This one's really interesting. Let's see what's going to happen there. But let's jump into oil, ladies and gentlemen. There we go. Oil, US oil back to 100. So basically, WTI oil is back to 100 levels. Look, at the moment, it is headline driven. So to try to say something logical in this about this, it's a little bit difficult. At this point, it looks that we could go further north because the conflict doesn't end. There's more, infrastructure, oil infrastructure damage. So logically speaking, it does look more like, further upside here could be possible. That's kind of, that's how I see it. Am I going to be right or wrong? I don't know. But look, for me I said to you before that if we do pop back above the $95 mark, I'm going to go higher. I said that last week. There we go. We got the move. So now what I'm going to do here is that, and this is the arrow, there we go. So what I'm going to do right now is say this, that if we continue to trade above the $100, then I will still remain bullish. For me right now at this point, a drop back below the $95 mark here, which is by the way the highest point of 2023. If we do drop back below the $95 mark, then yes, I'm going to lean towards the downside. Very simple. Brent oil. Look, these guys are this commodity is also above the 105 zone. Okay, again, similar story. There are problems. We could still see this one drifting back up. Looking at the monthly chart, you can see that yes, we are trying to go for these levels. Like on Brent here, 130, 35. It doesn't look bad actually. It doesn't look unreal. No, it looks quite logical. Considering everything what's happening right now, it does seem logical. That said, when everybody's shouting about like $200 or something like that, I'll believe it when I'll see it. I don't want to say anything yet, but like I said, I will believe it when I'll see it. So for now, I'm not seeing it, so I'm not believing it. Like I said, there's still room for trying to end this whole crazy madness, and I think that the US and Israel kind of, because they started this whole madness, so we're in this right now because of that. So and let's see where this leads. Honestly, let's see where this leads, because at the moment it doesn't look very bright, I would say. But certainly when everybody starts talking about this is one of the rules that I follow as well. When everybody starts talking about this everywhere, right? Oh my God, like oil $200. You have to be a little bit careful, honestly. This could reverse very quickly to the downside. This was 2022, if you remember, the beginning of 2022 when the conflict in Ukraine started. Everybody was talking about $200 as well. But we went higher, but 138, but then we didn't really like go towards that 200. So if you go to 200, I think that this is a major crisis. I think it could lead to a recession of some sort. Anyway, we'll see. Natural gas, ladies and gentlemen. Natural gas looking good. Look, this barrier here is providing resistance, strong resistance, 3.26. So if we can clear that, okay, great, I'll go higher. But for now, it seems like we're struggling with that hurdle. So, I'm not bearish, no, but I'm not really bullish as well. So probably that makes me more neutral. At the moment, I'm going to take this position. Ladies and gentlemen, let's wrap up everything with the crypto market. Look at this Bitcoin. So look, my target got reached. I talked about the 70 kind of 4 territory, 74,000 zone. I said this to you last week. I also threw out this little piece here on our YouTube channel. Quick crypto update. That's what was on Friday. And I said to you that this is going to be my target initially, the 74,000 zone, which we managed to test. We're currently trading slightly below it, but if we somehow clear this area, ladies and gentlemen, I think that there could be more upside to come, and we could see, this one actually, pushing maybe further north for a larger correction, back up, because in general, I would love to see a larger correction back up here if we do, because we have been like boring for quite a while now. So a little bit of a, going outside of the rules, going outside of the kind of the barriers or something, or what I want to say, that could be a little bit more attractive, more interesting. So keep that in mind. I'm just watching something happening here with my platform on the other side here. Okay. Okay. Look. So long story short, for now, I'm watching the 74,000 zone. If we can get a nice clearance, I'm going to go for a larger correction back up. Bitcoin Cash, very quickly. Bitcoin Cash, it looks positive as well. We climbed above the 467. That's great. So again, the same story. As long as we stay above this hurdle, a larger correction back up here is possible. Ripple is also nicely moving higher, and we broke the downside line. That's great. I talked about this in my recent little technical update, and I said that also if we do push above the 1.4520 zone, somewhere around here, then yes, that increases the chances for a further move north towards at least the 50-day EMA shown as the green line. But then maybe that gets cleared. Maybe we could, it could, if that gets cleared, we could see, a nice opening here for some higher levels. Ethereum broke through the upper side of the range here, finally. Broke through the upper side and pushed above the 50-day EMA. That's amazing. So what's next? Basically, at this point, I would say I'm going to aim for the upside. I'm still going to target higher levels, but I'm going to be very careful because this could reverse very quickly. This could go down the drain very quickly. So just keep your eyes on, stay vigilant and keep your eyes on some key areas of support and resistance. In this case, this 2,168 zone, previously I saw this as a good area of resistance. We broke it now. Now it could become a good area of support. Ethereum Classic, now this one's flirting with the upper side of this range here. Now this one's the more negative one, and this one's holding up here. So I would say let's not rush into conclusions, okay? Let's see what's going to happen here. If we can clear and stay above that 50-day EMA, then yes, I will get more comfortable with the upside. Litecoin, also, we're just briefly barely above the upper side of this range. So in a way, yes, it's a positive thing, but again, very close, still very close. It could easily reverse back down, but for now, everything's pointing a little bit more towards the upside. So I would say everybody's quite happy with that. All the bulls are happy with that, of course. Let's like I said, let's see if we can stay above this this 56 kind of, or 57 territory. Yes, if we stay above the 57 mark, then I think that there's more, more buyers could join in. Dogecoin, very close to the I think it's on the upper side of the, why is it not loading? Okay, yes. So we're very close to the 50-day EMA. We flirted with that this morning and we retraced back down. So basically, again, we need to push above the 50-day EMA. If we can get that move, I'll go to the upside. I'll go towards the 100-day EMA. Polkadot. Now, it's very nice to see Polkadot finally, being alive. And there we go. We're pushing higher. We're at 160 right now. I would love to see this move towards the 1.69 area right here. I think I think Polkadot deserves that. In general, I think Polkadot deserves actually for a bigger move, maybe back to the 2.33 somewhere here. That would be nice. Going and testing the 200-day EMA, but again, the market doesn't always do what I want it to do. So yeah, it's we have to accept. We have to have a cool head on our shoulders, and we have to understand that maybe we'll go a little bit higher. Maybe it will find resistance here. It'll start drifting back down. Maybe this is going to be a new range of some sort here. We had this little range here, so it seems like we're going in little steps here. So again, that's the thing here. I'm watching this barrier, the 1.69 kind of 50 zone ish. If we clear it, I'll go higher. Very simple. If we don't clear it, maybe a little bit of a moment back down could be possible. Tron is correcting a little bit back down here. But I still like it more than any other crypto, just because it's moving like a currency. That's why I'm really fascinated to watch this, and I will stick to my words that I said before in one of the sessions, basically, where I said that in the future I think there is a threat that cryptos might disappear, and most of the cryptos, a lot of cryptos might disappear. So there will remain, there will be certain cryptos, the big ones, that will stay, but I think that those are going to get absorbed by other asset classes. So just also because the way they're moving, the way they're shaping up, so I think regulation will win, unfortunately, in what's regarding the crypto market, because I think that eventually, like Tron, for example, it could become a currency. We could see it in the list of Forex. Then, for example, Bitcoin itself, right, could be like a commodity, could be more related to gold in a way. Bitcoin Cash could be like a stock, which is bouncing off from that commodity. Ripple also could be seen as a stock of some sort. Ethereum, like a commodity. Litecoin, maybe more of a stock. So again, this is what I think. I might be wrong, but hey, we're here to analyze the markets. So anyway, ladies and gentlemen, that is it. That is a wrap. Thank you very much for watching and listening. I hope you found it useful. And look, I know that I dragged it a little bit longer, but still, thank you very much. There was a lot to say. There is a busy week. I hope you're going to join me on Wednesday right now, but also don't forget to join me on the 26th. So sign up here, register. You can click on Learn, go into Webinars. It will take you to this page. Click on Register here, basically, and fill up the form, and you're all set. You're all done. So you can now join the webinar on the 26th. So yeah, we'll talk markets as always. But in this specific one, we're not only talk markets, but we'll try to see what we can do in terms of positioning, how we can approach the market in this turbulent period. Ladies and gentlemen, thank you very much, and I shall see you on Wednesday. Bye for now.